What up, everybody? Welcome to welcome to the chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. I almost welcomed everybody to the Ryan Ripken show, which that would not have been correct. But listen, markets just turned red, actually. So it looked like it were going green. We saw a pretty decent jump on the 10-year Treasury. They briefly topped over 5%. But then most of the day, we saw a decent move, except within the Dow. The S&P 500 was green most of the day, but everything's kind of turned red. NASDAQ is still up about 0.5%. We'll see where this goes. I think, and I talked about this last week, I think rates are about ready to top. And so that 5% top on the 10-year Treasury, I think could end up being pretty close to the top, if not the top. Take a look at TXN, the 10-year Treasury. I think that there's a sneaking suspicion that we're getting to an overbought area on that. And so what's that going to mean for stocks? We're going to talk about that later in the show, but I want to welcome everybody. What's up, Kevin Hawthorne? Good to see you, Lord Fenrir. What's up, Fernando Perilla? Savvy Money So, Tracy. Lindsay Heiss, I see you, Lindsay. You always liking my posts on Instagram too. I appreciate you. You still a real one. Many of you guys are, and I certainly appreciate you guys supporting me through the comeback. It's been awesome to really kind of like hear a lot of encouragement and support from all of you guys. So it's been great. Really appreciate that from every single one of you. Tracy H is losing his shirt on SoFi. We're going to talk about that too. I think it's a good one to discuss this afternoon on SoFi, and really a lot of the tech stocks that have kind of taken a beating. But like I said, the NASDAQ is actually holding up rather well. So I think that there's definitely some opportunity there, especially today, and really kind of leading into the rest of this week. We'll get into some earnings. So there's not too much on earnings today after hours. We take a look at what's reporting. We certainly could react to Cleveland Cliffs if you guys are interested in that. Logitech as well is reporting this afternoon. But really my focus today was going to be more on like a preview. If you guys caught the title, we talked about Coke, GM, and 3M. I think those are going to be ones to watch for. So they're going to be reporting tomorrow. Coca-Cola, Verizon, GE, a couple other ones are going to be reporting tomorrow. Spotify also reporting tomorrow before the bell. And these are all stocks that I don't cover because I go live, of course, in the afternoon. So the live reactions won't happen in the morning. So I was like, yeah, let's go ahead and just like give a little bit of a preview of what I think might happen with some of these stocks in general. And if you guys didn't catch my email last week that I put out on the industrials, I encourage you to go check that out or go sign up over at patreon.com/ownthechaos. Right now, I think the industrials have a good opportunity, but I think also there may be a shift towards tech. And, tech's already had a hell of a year, but since July, as we all know, it's been a pretty sharp correction because of interest rates. If you guys are new to stocks, interest rates go up, stocks go down, right? And vice versa. That's essentially what, that's oversimplifying it, of course, but that's essentially what we're seeing. We're seeing interest rates continue to go up, but the Fed's starting to soften a little bit on a lot of their tone. And there's a lot that's been resilient as far as what the Fed's done and what the markets have been able to handle. So in my opinion, I think that there's a lot of opportunity, particularly in tech still. And I think the industrials are also making a pretty strong move as well. Almost kind of like barbell that in your portfolio if you're looking for a more balanced approach. Those are two areas that I would look for. And in particular, I talked about Caterpillar being one to watch for. They have earnings on the 31st, so next week. I'm looking forward to those. I think that Caterpillar is actually going to have a decent week. Let's take a look at Caterpillar's chart, actually. I have that pulled up too, and we can kind of see that there's some pretty significant opportunity on Caterpillar. So obviously not one of those sexy stocks. We're not talking about Tesla, Netflix, or Microsoft or Apple, right? But Caterpillar still knows how to make money. And it's a dividend aristocrat. They continue to increase their dividend every year. And they've done so for the last, has it been 50 years that they've been increasing dividends every year? I think we're close to it on Caterpillar, but nevertheless, it's done really well. And it's one of those stocks that you can kind of hang on to and it just prints money for you. I think that there's a really good opportunity. This is your daily chart on Caterpillar. So I think there's an opportunity for this before we get into earnings on next week. That's the 31st. So it'll be next what is that? Next Tuesday. So next Tuesday, keep an eye out for that. As you can see, there's earnings that are indicated here. It's oversold, in my opinion. It really is. And so from a technical perspective, I think there's opportunity here as well. But I talked about Caterpillar in particular in our email, and I don't want to go into too much detail because I don't want to give it all away. But I think their focus on adjusted operating margin mirrors its strategic financial navigation. The stability amidst fluctuation, operating margins underscores pricing lower, but with a cautious eye on rising operational costs. So, there's certainly risk just like with any other stocks, but I think the opportunity here certainly it looks juicy, especially if it comes down and tests the support around 244. Could make for a really solid entry point leading into earnings on Tuesday. Checking in with some of the comments. ChargePoint just sucks, says to Husker. What's up to Husker? I haven't seen you in a minute either. Good to have you on. Lord Fenrir says, in theory, I guess that's the interest rates versus versus stocks thoughts. Yes, in theory, correct. That's why I said oversimplifying. Jeff Chow did not get a notification. That is weird. That is weird. Well, be a friend, tell a friend. How about that? We're live. Tell everybody. Thoughts on Costco this year? Thanks, housekeeping. I'll get to that question in a little bit. So I wanted to also just kind of get into some of the stocks, as I'd mentioned earlier, on what we're watching for tomorrow. So let's go ahead and get into, actually, you know what? Before we get into that, let's just take a look at the SPY real quick. The S&P is having a weird day. I mean, let's go back to the 5 minute. Here's what just happened today on the S&P. It had a pretty decent drop on the 10-year going bananas earlier in the morning. Then it recovered, and now it's kind of going back. Now we're back into the red for the day. Just barely, but it's still red. And so as I had mentioned before, I think that we are getting into a point to where yields are topping out. And I think this represents an opportunity for stocks, but it's still important to know which stocks that you want to go after. And, in my experience, I think that there's some opportunity, like I said, in industrials and in tech, which is why we're talking Caterpillar at the top of the hour here. And then speaking of industrials, we have another one that's going to be reporting tomorrow before the bell, and that's 3M. 3M, also another one that's kind of gotten beaten down along with a lot of other industrials and really equities in general. But look at this performance on 3M. It's been really tough year. But I think there is an opportunity for this one. If you guys haven't checked it out in a while, I think there's opportunity here based off of just valuation alone. We take a look at 4P on this. That's at 9.7 times next year's earnings. The real struggle here has been growth for them, and that's why the stock has been doing so poorly. Year-over-year growth has been at a loss for or has slowed down by 5.79%. That's year-over-year revenue growth. And so that's what we're going to have to wait to see from them tomorrow if they have started to see growth yet again. Tomorrow's expected earnings per share, $2.35, $8.03 billion in revenue. And then last time around, they beat earnings pretty good. So it'll be interesting to see what happens this time around. 13 downward revisions from the street versus 1 upward revision. And as we all know, that sometimes that contrarian, let me get rid of that. So sometimes, as we know, that contrarian type of sentiment does end up working out. It's not always a guarantee. Nothing is but death and taxes. But when it comes to, everybody zigging, as I always say, oftentimes, not every time, oftentimes it means that might play in your favor to zag. So that being said, as I'd mentioned, there's some also, I believe there's some legal stuff going on with them. Yeah, there's some legal headaches with 3M. What was going on with them? I had this pulled up. Let's see. Operating margin income too, by the way, while I look this up, it's about 20.5% was an increase of 4.72 relative to Q2. And that was back in Q2 2023. So if we see that growth, I think that we should see the stock move to the upside. If we see that grow from there. According to Seeking Alpha, 3M's Q3 earnings estimates, as I mentioned, was expected to be 225 to 239, up 33.5% from Q2 2023 estimates. So if they beat those numbers, 3M should do well. Anybody else got a pulse on 3M? Just to give your own thoughts. Would love to hear from you. This is what it was. This is kind of what brought it down to. 2023 is a transition year when the company's management had to use maximum efforts to reach agreements to resolve ongoing litigation that have been going on for many years. As a result, the company's share price had declined by more than 39% since the start of 2023, underperforming key competitors as the aforementioned Caterpillar and Honeywell. So I just got done talking to you about Caterpillar and how I thought it was a good one to take a look at, but 3M could be an opportunity just because it's gotten beaten down so much. And yeah, year-to-date performance has been rough. As of right now, it looks like it's down around 30.25%. So if you're in 3M, I would say hang on to it. Definitely wouldn't be a time to sell, in my opinion. But if you are looking for an opportunity, then this could be a spot for you. Let's go back to the daily on 3M. Don's got this one zoned out, but it's so far below his zones too. Whoops. Let's scroll this back out. There we go. There we go. There we go. Boom. Now I know how to operate a mouse. Yay. Hearing law? What are we talking about, Don? Don from the Don Frown Show showing up. Oh, faulty plug. Oh, that's what the lawsuits were. Hearing loss and faulty plugs. Yeah. The litigation that I was talking about. Yep. Thank you to Husker. So that being said, that's what brought the stock down for most of the year. So that's why I think that there's some opportunity here. We'll see. Thanks for the clarification, guys. Appreciate you. But yeah, that's a preview there on 3M. Moving on, there's Coke as well. Let's take a look at Don's chart where he's got that zoned out on Coke. Yeah, so Coke's actually had a hell of a bounce from the bottom of the zone. They have earnings tomorrow, pre-market. And again, this is your daily chart on Coke. Honestly, Coke's like one of the best stocks that you could own if you are just looking for steady, solid dividends, and you just want to set and forget. This is one of those stocks that you just set and forget. You buy it and you don't look at it ever again. You just keep adding to it, and that's it. Their dividends are ridiculous, dividend growth. I think this is another one that's been raising their dividends steadily for the last 50 years. It's a dividend aristocrat, nevertheless. Payout ratio is at 70%. Annual payout forward is $1.84 per share. 60 years. Yeah, dividend growth has been for the last 60 years. 5-year growth rate on dividends is 3.4%. So just steady as she goes. Growth has been so-so, 6.82% year over year. But you don't buy this for growth. This is not a growth stock. This is a company that just is never leaving. Estimated earnings per share tomorrow is 69 cents. Pause. $11.42 billion in revenue is expected. This is another one that's got a bunch of downward revisions to one upward from the street. So I don't know. Do we like Coke here? I'm kind of on the fence as far as how to play this for earnings tomorrow. But it's had a hell of a bounce out of this zone. And given the way the rest of the market has moved, Coke looks as if it stayed pretty resilient. Again, this is on the daily chart. And it's moved down since July along with everything else. But I like the way that it's kind of had this bounce. over the last couple of weeks. So since the beginning of the month, October 5th. So yeah, last couple of weeks, it's had a pretty decent move for Coke standards. It's not bad. Today was not a great day for it, but I don't hate it here. Let me know what you guys think about Coke. Is this something that you actually trade? Is there any traders of Coke? Except for Don, because he just trades everything. Need to have you back on, Don. It's been too long, man. It's been way too long. Gotta have you on soon. All right. So that's Coke. I'll let you guys comment on that one, and as we go on, I actually put a poll up as well, and this is interesting. So I thought for sure there was going to be a ton of pessimism in the chat today, and there isn't much. So I asked the question: are we bullish or bearish this week? 33% of you so far said stop asking, we're fucked. Loading the boat as 24% of you, and almost half of you, 43%, are just holding for now. So interesting that many of you, I find it interesting that many of you are not moving the cash, which is good. I don't think that moving the cash is the right move here. I think holding is. And if you're looking for opportunities, they're certainly out there. Don says he actually has Coke for the dividend. Yeah, well, because it's one of the best ones out there, for sure. So this one isn't one that he actually trades. Okay, so there's Coke. Next, we have General Motors, GM. You know, the legacy companies haven't had best of times over the last year and a half. So this is going to be another one to keep an eye on for tomorrow as well. You know, we've heard from Ford how they were kind of pausing or slowing down production of the F-150 Lightning. Elon Musk had a lot of doomsday type comments that he made on his earnings call last Wednesday. And so this will be another one that certainly a lot of investors are going to keep an eye on, maybe not necessarily to trade GM, but just to kind of get a gauge of the overall industry and what the hell's going on, what's demand look like. But goddamn, if this isn't cheap. Ford PE is less than 4 times next year's earnings. You heard that right. It's at 3.96 times next year's earnings. That is crazy. And they are still growing. Growth from a revenue standpoint was up 30% year over year. Revenue growth forward is expected at 11%. And, you know, we've talked about this. We actually talked about this during Tesla's earnings, but their gross profit margins at 12%, almost 13%, which, you know, for legacy car companies, it's actually not bad. It's, I think, better than Ford's. But obviously you have the UAW and a bunch of other stuff that's been going on with General Motors lately. So, labor costs certainly have been a problem for them. I don't know what to make of the car companies as of late. Don says GM's 0. Well, we know where Don stands on it. What's the forward PE for Pontiac? Oh God. GM will benefit from inflation because it's intrinsic value. I don't know about that. GM's going to survive off of demand. And what's car demand look like lately? It hasn't been great, right? So that's what we're going to continue to keep an eye on. By the way, there's 42 of you guys in here on a Monday when there's slow earnings. I appreciate that. Hit that thumbs up if you wouldn't mind. I would love that. If you're coming back, you haven't seen me in a while, hit that thumbs up because I'm here to stay. Warming things back up. They're kicking the tires again on the channel. So anyways, expected earnings per share for General Motors is $1.84, $43.25 billion in revenue, 13 upward revisions on this from the street. Last time around, they actually came in and beat earnings by a lot. They came in and beat earnings by 2.3 $3.38 billion. Sorry, they beat that by revenue. Earnings per share, they beat by 7 cents. So I would say there's opportunity here for GM. Demand, of course, has not been great. But I think there's opportunity here. I really have to. I don't like saying how much lower can it go, but I don't think it can go. I don't think it will go too much lower from here. This was a crucial spot, and that it's going to probably that carried the momentum down. Once it broke around $30, it just continued to carry down, and it closed the day at down 1.5%. So that's where it ended up closing down today. Closed at 29.22. I would say if earnings aren't great, watch out. This probably has the potential to go down to maybe around $25 a share. I would still be looking to buy this if it went down that far, depending on what they had to say on their earnings. I mean, if it's really like things are bad, then stay away. But if it's like things are okay but not great, maybe earnings do end up beating, but the guidance isn't all that isn't. Even if they come in and say things are good, we just can't give good guidance on what's ahead because of all the uncertainty. And that's kind of what's keeping stocks down here. Anyways, lots of people are afraid of what's going on geopolitically. And then, of course, inflation and everything else. It's the same conversation we had last year, by the way. This time last year, everybody thought that there was going to be a recession in 2023, and it did not happen. This time last year, here you go. Here's October 2022. All the S&P did was go up from here. And that was like peak fear. If you guys recall, it was not that long ago that people were freaking the fuck out. And S&P came down to 346 back on October 14th, 13th. I'm not saying the same thing's going to happen here. I'm just saying that there is opportunity, and capitalizing on the fear of others usually ends up working out in your favor. So I would say, like I said, watch for this to go down to $25 if we don't get a good response on earnings. I think that's certainly a possibility. If we do get a good response on earnings, watch for this 32 area, 32.25. That's right around where Don has the bottom of the zone drawn out. I would say even there's a resistance here, probably around 31.25. So you can watch those areas there for General Motors, but I kind of feel bullish on it. Government Motors, says Don, for sure. GM would already be at zero if Obama hadn't stepped in. Yeah, but at the same time, they can't let it fail now. GM, after all, is leading the EV. I feel like there's a lot of personal opinions about this and not objective ones, but I appreciate it. Bob, who are you calling an old man? Old man? It's good to see you, Bob. Thanks for hanging out. Steve Hoyer says, just read Bill Ackman's statement from this morning. Are you worried about 30-year Treasury and rising yields? I am not, Stephen Hoyer. In fact, as I had mentioned, I think that we're seeing a peak in yields. I think we're going to see a peak in interest rates, and I think it's coming soon, if it's not already here. Here's the thing about Bill. Bill's going to say things and act in his own interest, and we've seen that time and time again. He's an amazing investor, and there's a reason for that. It's because he acts in his own interest. And so if there's certain things that he says that sways the general public, that plays in his favor, he's probably going to say it. And we saw that through COVID. We saw that when he made the play on Netflix not that long ago. It was last year. The guy knows what he's doing. So I don't know if I would listen to him as a way to invest. I think I would listen to him as a way to maybe perhaps do the opposite in a lot of cases. Don says, I hear Bill drives a Chevy. Probably a Cadillac, but yeah, same thing, right? I feel like Ryan is listening. So I was talking to Ryan Ripken. Again, if you guys haven't checked out the Ryan Ripken show, go check it out. That's my second channel with Ryan. We talk sports over there. If you guys are interested in that, feel free to do so. But he told me he was listening today, and he drives a Chevy. Which just made me laugh. Just waiting on Meta Wednesday to sell covered calls in my Roth IRA. There you go. Yeah. So if you guys didn't catch what's actually reporting, we do have a jam-packed week. So today's a little bit slow, which I can appreciate, which I'm okay with, because tomorrow, watch out. Tomorrow's going to be a big day. We got Microsoft, Alphabet, Snap, Visa, Teladoc, Texas Instruments. Huge day tomorrow. I mean, I talked about pre-market stuff, but I didn't even start to talk about what's going on aftermarket, what tomorrow's show is going to hold. So yeah, again, Microsoft, Alphabet, Snap, Visa, Teladoc, those are your big names. Then Wednesday afternoon, it's Meta, IBM, ServiceNow, Align, O'Reilly Auto Parts, a couple other big ones. And in the morning on Wednesday, it's Boeing, Thermo Fisher, T-Mobile, Hilton, Old Dominion. Then Thursday, another big day. In the morning, it's Royal Caribbean, UPS, Hershey's, Altria, Southwest, Tractor Supply, Northrop Grumman. Then Thursday afternoon, still heavy hitters. We got Amazon, Enphase, Intel, Ford, Chipotle, Skechers. Friday is even Exxon, AbbVie, Chevron. So it's a big week. Probably the biggest week for the S&P and the NASDAQ is this week. So, big tech is going to be reporting this week. So it's going to be a big week. I'm looking forward to it. So I know I might seem a little bit chill today, but tomorrow it's going to be huge. And then the week after, the next 2 weeks after, it's going to be like just bananas with the smaller companies, but those are companies that are very popular, right? SoFi's and all that. So, like I said, chill day today, which is fine. It's Monday. We're just getting in the swing of things. We're still waking up. We're still getting over our hangovers. Lord Fenrir is probably hungover because his Bears won. By the way, are you done with Justin Fields, Lord Fenrir? Anybody a Bears fan other than him watching today? Bears looked good without Justin Fields. First time they'd won a home game in 300 and some odd days? Almost a year, if not a year. Junior Stockenville, thanks for always making earnings report fun, unlike CNBC. Hey, no problem. Listen, stocks are boring. I try to do what I can to make them interesting. I love stocks because I'm boring. And I got to make it interesting. So Alex Ramirez wants to fire Josh McDaniels. Yeah, Josh McDaniels, man. Biker Brian says Chevy had some great muscle cars back way before your time. I had one of them. I had a 1981 Pontiac Firebird. It's funny that Don actually mentioned Pontiac earlier. It was a 1980. It was like the old Smokey and the Bandit Firebird, and I built that thing from the ground up. Touched every bolt on that car back when I worked on cars. Maybe one day I'll share some pictures of it, but I love that car. Yeah, back in the day, GM had all the good ones. I like Justin, but any change is welcome, says Lord Fenrir. Hey, listen, a dub is a dub. He might be that might not be starting next week either. So it'll be interesting to see how this momentum carries into next week, my man. But I was happy for Bears fans yesterday. Stephen Hoyer says most excited about Google earnings, one of my biggest holdings. Yeah, and Google's one of the cheaper of the big tech stocks. I mean, Meta's still the cheapest, believe it or not, even though it had its monster run this year. It's up 80%. But yeah, Google's definitely on the cheaper side too. Niners going to wreck the Vikings tonight, says Jeff. Jeff says Niners fan. Yeah, I mean, I would imagine the Niners are going to have to bounce back from last week, losing to the Brownies. I kind of feel bad for Kirk Cousins, man. I'm a huge Kirk Cousins fan, but just can't pull out the wins. Browns are weird beating the Colts. Listen, the Browns are a scary team. The Browns, I saw that coming. I saw that coming for sure. The Browns defense is no joke. It's the offense that's the problem. And Deshaun Watson looks like he's also the problem because every time he's not playing, they win. Anyways, getting back to stocks, let's take a look at SoFi real quick. I saw somebody said they were losing their shirt on SoFi today. And yeah, today it was down only 1.5%. Over the last week, though, it's been rough. Over the last week of trading, we'll say 5 days, that's down 12%. Here's the chart on SoFi. And the stock itself, I still, sorry, I should say the company itself is great. Sometimes great companies don't make for great stocks. And right now, it's just not a great stock as of late. You know, it's had a huge correction from when it was all the way up at over 12. Was it $12 was the high? Almost $12. 11.65 back in July. And so ever since then, it's been rough. But their earnings have proven to be really good. October 30th is so next Monday is going to be their earnings. And so I'm actually looking forward to that. Expected earnings per share, and it's a little bit early, a loss of 9 cents, 514.61 million. This company is valued right now at $7 billion. Just to put this in perspective, SoFi Stadium cost $5 billion. So this is still cheap. And the growth here is still ridiculous. Growth here is at 50% year over year. Revenue growth forward is expected at 35%. I like SoFi still. It's been tough. Gross profit margins at 81%. So once they start taken care of, getting out of the loss column, once they start getting profitable, as far as net profit's concerned, not gross profit, net profit, this stock is going to go bananas. So it's only a matter when, not if, SoFi goes bonkers. I think that this is going to be something that is going to be an opportunity. Wouldn't surprise me if throughout this week we saw SoFi retest the top of this zone at around 642. Again, these are Don's zones. I don't want to take credit for them, but he is gracious enough to allow me to use them on the show. They are extremely accurate. The magic yellow boxes don't lie. $6.41 is that spot to watch for SoFi. If it gets down to that area and holds, we see some sort of bounce, I probably would be loading the boat on SoFi. Of course, always manage risk. Always make sure you have stops in place. But man, it is. Tell them SoFi has a stadium. They need to know. I did. Who plays the Chiefs in the Super Bowl this year? Chiefs are going to be sitting at home in the Super Bowl. I believe that. Kelsey and Swift. You know that Taylor Swift does not play for the Chiefs, Don. You know that, right? And just to let you all know, Don likes to think he's talking. Don't think that Don knows what he's talking about. He knows Travis Kelce, Patrick Mahomes, and that's probably it as far as the Chiefs roster is concerned. Probably can't, without Googling, he probably can't name me another Chiefs player. I miss you, brother. You gotta at least call me. Hit me up. Okay. So I think that's gonna do it for today. Was there any other questions I needed to answer? Anybody else have questions? Oh, Costco. Housekeeping asked about Costco. Yes. Let's take a look at Costco real quick. I saw housekeeping asked about it. Costco is let's see here. Have we still not gotten a special dividend for Costco? This is how long it's been since I've actually looked at it. This looks like a special. Is that not a special dividend? November, August. No, it's not special. That's a regular dividend. Okay. what I'm telling you, when that special dividend comes out, watch Costco's going to go bonkers. Going to go bananas. The special dividends usually like double or triple what their regular dividend is, and the regular dividend's pretty damn good too. Um, to answer your question, housekeeping, I like Costco. I think that I mean I still like it. I like the trend that it's on right now. I'm interested to see how this is going to fare as it's bounced off of this zone, the bottom of the zone. We saw this little spike down below, but it's held in the zone. If it starts to move back out, I kind of like Costco. And Don, I would love to get your input on this too, just to see if I'm reading this right. But it looks as if Costco could potentially bounce out of this. We'll see what happens tomorrow. But I would be curious to see if Costco closes out of this zone between this 552 area, 552 and what, 551 and a half. Oh, sorry, 554 and 551 and a half. I still like Costco. If we're just looking at this particular sector, I still like Costco at all the big box stores. Oh, I'm sorry. I didn't even show you the screen. Rookie mistake. Tesla. Oh, I like this. Tesla to 100 or 300 first. Just to answer your question, housekeeping, I would go long if I was going to go long or short on this. I'd be long on Costco. Tesla 100 or 300 first. Interesting bounce today on that one. Oh, that's cold. Lord Fender says if Brad was a real Baltimore fan, he would support the Colts. I'm willing to bet money, Lord Fender, that Don doesn't have a clue what you're talking about. That's rough. I would be a Baltimore Colts fan if the Baltimore Colts were able to keep their history in Baltimore. Yet if you ask any Indy fan, the Super Bowls are theirs, which is bullshit. They were one here. All right. Am I back in Maryland? I'm back in Maryland for the moment, Bob. Traveling back and forth. But studio's still here. Not getting ready to studio anytime soon. Missed the 3M coverage. I covered it probably around the 10-minute mark, Alex. So feel free to go check back and look at that. But I feel good about 3M. I think there's some opportunity there. Just to give you the brief synopsis of that. Tesla, though, am I 100 or 300? I'm going 300 first on Tesla. That's what I'm going with. It's funny you mentioned that, Bob. I wasn't even born when the Colts skipped town. I wasn't even thought of yet. I was born in 86. $63 million in February calls for Tesla today. Ooh. Better hope it goes to 300 first. Oh, and to Costco, Don says he likes it here, but waiting to see first. No rush to buy it right now. That's kind of how I felt about it. Definitely wait and see on the zone there for Costco. It's kind of what I thought. Ben Young goes Phils. Go Phils. Yeah, the Phillies, man. This is coming from a Chicago Bears fan. I don't need to say anything else. All right, that's going to do it for today's show, guys. Thanks so much for tuning in. I certainly appreciate it. It's amazing that 51 people are watching the show again on a Monday with no real earnings to speak of. And I'm pumped that you're pumped for me to be back. I have to say that I was a bit nervous. I figured nobody was gonna come back, and it's starting to feel like a lot of you are coming back. So I love it. I'll be here tomorrow. Tomorrow we're going to be covering earnings Microsoft, Alphabet, Snap, Visa, Teladoc, Texas Instruments. And then we can kind of react to what happened in the morning. Tomorrow morning, there's Coca-Cola, Verizon, GE, RTX, 3M, Spotify as well, and GM. So they're going to be pre-market. I can kind of react to those a little bit as we come into the afternoon. So make sure you're hitting that subscribe button, hit that notification bell. I'll be live at 3:45 p.m. Eastern time tomorrow to cover those stocks. And on your way out the door, make sure you hit that like button as well. Guys, thanks so much for tuning in. I'll see you all tomorrow. I love every single one of you. Peace.